November 1st, Tuesday, market analysis, Stan Ehrlich. As usual, I'm going to start out with the spider, the S&P 500, but I'll also touch on sector symbols, forex, futures, of course, and interest rates in particular. All right, let's start with the spider daily data chart. We have some interesting developments. We have a bearish engulfing at the moment. Remember, the market's not closed, and if it rallies enough to get higher than yesterday's closing price, it will not be a bearish engulfing. It'll be an engulfing, but it will have a higher close, which will be a bullish engulfing. So with the simple couple of ticks, you can change things from being bearish to bullish, literally. I'm not expecting this bearish engulfing, if it does close lower than yesterday's close, to be a terribly bearish sell signal. I think it's going to come back down to test 379, a little below 380, with the possibility of dropping down to about 371 or 372. Remember, it's at 85 at the moment. So a modest to decent sized decline in what I still think is a bull move, resulting from the October lows on October 13th, which is just great. I reiterate, it was a gigantic green ER automated signal that caught the bottom of the market up to and including today. And I think it's going to rally up to at least 403 to 410 in the next month to two during November, and maybe into early December, since today's November 1st. I also have to mention that the DIA, the Dow Jones, and I don't always bring up the chart, but today it's particularly important because it does have a classic bearish engulfing ER sell signal automated. We have a higher high for the trend, both in the spider and the DIA, and today in both cases, but the spider wasn't overbought, therefore it doesn't have red. The DIA has been overbought for the 6 previous trading days, which is quite a few. And today, wham, we have a bearish engulfing. Now, there is a gap to close from, guess what, 6.5 days ago. And it is down around 311.5. We are 26.5, or 326.5 right now. So there's a chance that the market could come all the way back down to that gap and close it before it continues to trend higher. It's certainly something to watch and use as a gauge for both the spider and the QQQs. And mentioning the QQQs, we also have a bearish engulfing without a new high for the trend. And I don't think it's going to be coming down as much as fast as the DIA, which again was overbought for 6 days, again a lot, or the spider, which is going to come down a little bit. In any case, remember, when we have these bearish engulfings or bullish engulfings, there's a tendency for the market to come back into approximately the middle of the range of today, whatever the range today will end up being. It could make a new low before the close. And by the way, this is a very late recording. It's about 11:15 California time. We have an hour and 45 minutes left until the market closes at 1 o'clock California time. So as you can see from the 1-minute chart on the spider, we have sideways price action kind of forming a pennant here for the last few hours. So it's done a lot of nothing, and it'll probably break out of this little pennant here and before the close. And I'm thinking on the downside. So that's the stock market indexes. As far as the spider is concerned, and the other indexes, a modest, maybe small, but modest, small to modest correction now, taking maybe a week to evolve, looks likely. Remember, bull markets don't go up as fast as bull markets go down. So having a few days to a week or so correction in a bull move is nowhere near unlikely. So here it comes. Again, I don't think it's going to turn into a bear market collapse and make new lows to the trend. I think we're going to save that for something in the late December, January timeframe. I am ultimately expecting a 320 approximate major long-term downside objective, which I have been saying for a year. Well, not quite. January, February of this year. Most of the year, almost all of this year. Interest rate, the October lows. Since we are now out of October, that was past tense, the low on October 13. It was a fantastic one. This is weekly data, so you don't see the green bullish engulfing like you do on the daily charts. And it was in the DIA for a double bottom. It was also in the QQQs and the Russell 2000, I believe, as well, all across the board. And in a lot of sector symbols as well, which we'll get to in a few minutes. So here's your October low, past tense, cast in stone for the year of 2022. So you got to wait another year to see it happen again. Plan for it. Whoops, I did it again. Resized instead of changing workspaces, and interest rate futures are around unchanged. They were up fairly nicely early, and as they rally, actual rates on a very short-term basis, day to day, tend to go down some. So this chart is an inverse of actual rates. The chart goes up, actual rates go down. Right now, we're slightly higher to about unchanged on the notes and the 10-year, 10-year notes and the 30-year long bond. I want them to go higher. I want them to trend higher. So we'll see rates start to slip some, which would support the probability or likelihood of a rally continuing in the indexes overall. Let's look at the futures. I'm going to scan real quick across tops and bottoms, and oh yeah, here we have the outside down day in the YX futures contract for the DIA equivalent, and you've got yourself a bearish engulfing on the DIA. You go short the stock market in a general sense, the DIA in particular, because I have my automated signals, ERSignals, 100% automated trading system giving me a sell signal. By the way, it gave me a buy signal smack dab on the bottom of the market. Turns out to be a double bottom formation. And we have had some great signals before as well. Buy signal at the bottom there. Buy signal right there at the bottom. Sell signal on top January 5th, the beginning of this bear market to the exact day. And a buy signal close to a low right here. It wasn't the exact low. Very, very close. So looking at other futures contracts, no, and I'm just looking for red or green real quick across the current vertical bar. And the only one we've got today is, of course, the Russell. I'm sorry, wrong. The Dow Jones futures contract. YM is the code. Let's look at sector symbols now. The real estate sector symbol gave me a signal at the bottom of the break a few weeks ago, middle of October 13th, with the rest of the market. And we have a new high for the trend. It is not lower on the day yet and does not have a bearish signal. The IYR is doing basically the same thing. It is the iShares real estate ETF. KBE, Spider Banking, has a higher high for the trend up, and we did get a buy signal on October 3rd, basically at the bottom of the break, and up we go. The highest high for the trend is today. Also, SMH is the semiconductor, bottom of the market, October 13th, and a supporting bullish engulfing a few days later has helped it work higher, and today's high is the highest high for the move up. XLB No particular buy signal here, but I do want to point out that October 13th, there was a gigantic bullish engulfing, but unfortunately it didn't get oversold enough to generate the green color on the bar, which would have been a complete ERSignal buy signal, but it wasn't quite close. XLK, the tech spider, bullish engulfing, smack on the bottom. XLU, oversold for a few days prior to the turn up, an indication that it was about to turn up, but no bullish engulfing, so no green bar. We did get a great sell signal on top way back in August 19th. Lasted about a month. XLY is the consumer discretionaries. Buy signal on the bottom. Today is not the highest high for the rally, and it is a bearish engulfing. So I do think the market's going to start to slip off here, but it has been and may still be a damn good buy signal. Excellent. Let's go to forex, pointing out that we've got the bullish engulfing on the bottom of the euro dollar and the top high bar of the DX. And lastly, well, that's pretty much it. The forex is my last topic. Today is going to be a very interesting day as to how it turns out and how the next few days behave. Assuming the reversals stay reversals, we should see some short-term weakness. Thank you for listening. Stan Ehrlich. Tune in tomorrow morning. Have a great trading day. Signing off.